Hello traders, Gary Wagner with the Silver Forecast here, about 11:45 in Honolulu, Hawaii. It is Thursday, the 24th day of March, and this is the daily review for silver. Silver has traded to a new 31-year high. We saw that high in trading last night, as you can see, breaching $38 per ounce of silver. Now, upon that move, and we are looking at a 120-minute candlestick chart. Upon that move, we had this one pattern. This is an engulfing bearish right here. And from the engulfing bearish, the market did come down, and we have a mild round of profit taking. Now, traders, what I've done is I have added in a classic Fibonacci retracement so that we can take a look at this last move. Of course, I'm taking it from this bottom right around 33 cents up to the top. This is that record top at 38.11. And what you're going to find that's interesting is that our 23% level right here, 37.07, just so happens to be where the market sold off to. Now, I've just gone ahead and darkened the one line and extended it. Let's go ahead and blow this chart up. So I think that you can see in terms of absolute support, we're still going to have to see what the market wants to do. But my sentiment is right in here, this $37 per ounce is going to provide us with really, really strong support in the marketplace. I believe that it's pretty critical, actually, that it hold this level, because the next real level after this, of course, is the 38% level of retracement. My personal feeling is I don't think that we're going to see silver trade that low, but of course that 38% level takes us a considerable amount lower, and that puts us right in here around $36 per ounce. And you can see this absolute band of support, which used to be resistance right here, because of course when that market broke above that, it really steamrolled to this new record top. Now, I have converted our candlestick chart into a average or Heikin-Ashi. Again, realize these average charts always lag behind by virtue of the fact that they're taking averages. And you can see that although we see support in this area, we have no signs yet, and we'll have to see what happens when the market reopens, but we have no signs yet in terms of our average chart that we do have a turnaround. But I believe on a technical basis, this one level that we have, this Fibonacci 23% level at 37.02, that should hold in terms of a support level. I think that when the market has these types of aggressive rallies that have a tremendous pace to the upside, to me, not only is it important, but I believe it's critical that we release that energy, we release the steam. In other words, that we have these rounds of profit taking so that we don't get what is a parabolic meltdown at some point when the market does correct. When you get a series of smaller corrections as the market moves up, to me, it's a much healthier way for us to see the market move to the upside, because it gives us less risk of a major correction as these markets hit these new marks. And as you can see, we have absolutely hit a new mark, because realize that the last time really silver actually ever traded in these areas was really an aberration when you consider the fact that you had individuals, the Hunt brothers, trying to capture the market. When they drove the market up near $50, that market sold off like a rock when it did sell off, and it never looked back since. These are the first times that we've seen silver in these prices where it's not a bubble, so to speak, and where I believe we can sustain this kind of price activity. Now, of course, when we take a look at our daily, again, they're lagging. This is that record top. This is that $38 right here. You can see that it, of course, has backed off. But the things that I look for on the Heikin chart, you still have an absence of lower tails. You still have very, very good body size. In terms of the larger picture, our overall trend is absolutely still to the upside. Now, of course, what remains to be seen is Will this market continue to correct, or is this going to be just that small blip? As I said, it comes to 23%, but there is that 38% marker that we very much want to be cognizant of. What we will look to do is, as the market trades and reopens, we want to pay very, very close attention, because if we see selling pressure come into the market, it might be the most prudent choice to simply raise our stops or take those stops to the market and pull profits, and then look to rebuy back at $36, which is that 38% retracement. However, if it does hold, because on a runaway bull market, these little 23% retracements are typically all you're going to get, we might want to add to that position. So we are at a crossroads, and during this crossroads, we want to pay very, very close attention to what we see within the marketplace. Of course, if I notice anything during the trading day, I will send out a special email to instruct you as to our new trading strategy. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekend review in silver. Bye-bye.